statistical techniques, then we have the budgeting, and then we have the standard costing, and the last is the performance measurement. So these are the 6 areas, with the composition of which this whole course is made up of. Now, overall, if we talk about as far as the paper pattern and everything is concerned, we have over here that the syllabus is going to be assessed by 2 hours computer-based examination. Questions will assess all parts of the syllabus and will test the knowledge and some comprehension or application of this knowledge as well. The examination will consist of 2 sections, section A and section B. So we are going to have 2 sections, section A over here and the section B as well. And the section A is going to consist 35 mark objective test questions, and the section B will contain 310 marks multi-task questions over here, right? So I can simply say that the section A is going to be 35 MCQs over here, right? And these MCQs, if I talked about, are going to be 2 marks each. So you will have 70 marks over here. And then in section B, you will have 3 MTQs, multitask questions of 10 marks each. So this is going to be 30 marks. So total is going to be 100 marks paper. And we all know the passing is going to be at 50%. Now, overall speaking, how the breakup is gonna be from these 6 areas. Overall speaking, this whole syllabus, all the 6 areas can be in the section A of the paper. I mean, in the section A where the 35 MCQs are going to be there, you can have these MCQs from any area of the syllabus, from any area the examiner wishes, he can test you up over here, right? But when we go into the section B now, the section B where you are going to have these 3 MTQs, this section B is going to be explicitly from these areas, from these 3 areas, this budgeting, standard costing, and performance measurement. This is going to be the section B of your syllabus. Over there, you're not going to have the question from the first 3 areas of the syllabus, right? So clear this up. But in the section A, you can have the question from these last 3 areas as well, right? And overall speaking, this budgeting is something which is going to have your analytical techniques as well. That is a comparison along with the ratios as well, where you have to talk about the performance evaluation as well. So we'll talk about each and every area in detail over here, so you don't have to worry about over here. Like this is saying that the budgeting MTQs in section B can also include the task from B2, that is the analytical techniques in the budgeting and the forecasting, this analytical techniques that we are saying now. So this can include a bit, but that is going to be something which we are going to use in order to calculate the budget and all. That is not something which is going to be explicitly, or that is going to be something which can be there, but that particular formula or that particular approach is going to be used for the calculation of the budgeting questions, not something separate or out of the way, right? So this is what overall speaking we have for the syllabus over here, right? Now, moving ahead from here, if we talk about as far as the types of accounting are concerned, right? I mean, if we talk about as far as the types of accounting are concerned, we have majorly 2 categories of the, as far as the as far as the accounting is concerned. One is called as the financial accounting, then one is called as the management accounting, right? Now, if we go into as far as the segregation is concerned, this is the financial accounting, and this is the management accounting. And within the management accounting, you have one more thing called as the cost accounting as well. Now, if we talk about the financial accounting, it is the recording, summarizing, and presentation of financial transactions to produce the financial information, whereas the management accounting is the preparation of financial and non-financial information to support management activities. And if we talk about as far as the cost accounting is concerned, it focuses on costs, right? It focuses on cost, it focuses on resources or the resource allocation and their relevant cost. It is a sub-function of management accounting, right? So basically, we have two major categories. One is the financial accounting, one is the management accounting. The financial accounting basically talks about the recording, summarizing, and presentation of financial transactions to produce the financial information. Whereas the management accounting is the preparation of the financial and the non-financial information to support the management activities. And then, as far as the cost accounting is concerned, this is something which focuses on the cost. It's a sub function of the management accounting. And overall speaking, this is something where we talk about the resource allocation along with the cost that they're occurring. And then at the end of the day, we have to compare their, the relevant cost as well. So this area, I mean, if I go, I can simply, call it up this one, the management accounting and the cost accounting. This is something they go hand in hand all together. And this is the major, or we can say the cost accounting is a sub function of the management accounting over here, right? Now, overall speaking, if we talk about this cost and management accounting, now, the types of accounting, we have the features of the useful information, the characteristics, and the characteristics are basically, we say that they have to be accurate. And then the information sources and categories, we have the internal source of information, external source of information, then we have the data capturing costs as well. And then we have the data and the information as well. And then we have the planning, control, and the decision making within the management accounting as well. And in this, we talk about as far as the planning is concerned, the control, the decision making. We have three levels of the management that you might have learned or read about earlier as well. We have the strategic level, then we have the technical level, then we have the operational level. In the strategic level, we talk about the planning. As far as the control is concerned, that is into the tactical area, and the decision making is something where we are doing the operational planning and all. Then we have the big data over here. That is the overview, aspects, use, and the problems. And then we have the limitations of the management information, where we are going to talk about as far as the overall limitations and everything is concerned. Right now, basically, when we talk about this, the planning, decision making, and the control is concerned, basically, we have this thing over here, or this, the diagram over here, basically, which we make up over here. And this, this area, I would like to use this one. Now, if we look at this area, this area over here, this one, where the planning, control, and the decision making, they are intersecting with each other. This is where the management accounting is over there, or this is where the core area or the expertise of the management accountants are. They are right in between the planning, control, and the decision making. This is the strategic level, this is the tactical level, the decision making and everything is concerned. And control is something where we are talking about as far as the operations and all of the organization are concerned. So what we do is, at the strategic level, we make up a plan. Like, for example, if we want to have a 20% share of the, or share the market, or we want to be the 20% supplier of the whole market, or we want to have a 20% share or the capitalization share of the market. So that is something which we have planned at the strategic level, where we want to see ourselves in 5 years time. like in 5 years we want to be at the 20 or 25% sole provider for as far as the material are concerned into the market is concerned, right? Now what happens is this is something which you have decided at that strategic level, right? So you want to have the 20% share of the market. Now this information or this plan is going to be transferred, or it's going to be taken down to the tactical side or the tactical area or the tactical department. I mean, we have seen, I mean, as far as the organization is concerned, we subcategorize this into the strategic, then we have the tactical, and then we have the operational level. Na? So on the strategic level, we decided that we are going to have the 20% market share, or we want to have the 20% of the market share in 5 years time. Now this is something which is transferred or which is taken down towards as far as the tactical area or the tactical department is concerned, or the tactical level of the organization is concerned. Now what they are going to do is they are going to break it down into the smaller the goals or the objectives, basically, right? So they are going to divide it. Now if you want to have the 20% share in the market in 5 years, or say in case you want to have the 25% shares or market share in 5 years time is concerned, so that is 5 5s are 25. So every year you want to grow by 5%. See, every year you want to grow by 5%, or say in case if you want to have the 20% share, so every year you have to grow by, overall speaking, as far as the 4% is concerned, right? So you have to grow by 4% per year over here, right? So this is something per year you want to grow by 4%. Now, what's going to happen is this 4% is going to be transferred to the operational side, where it will be divided by 12 and you will get around 0.33%. So it means per month you have to grow by 0.33%. So basically what happens over here is that to the operational side now, we divide into the daily or the weekly targets. We divide the overall target, we divide the overall position into the weekly or the daily targets which the operational teams or which the workforce has to do, right? They're not into the planning, they are just given the tasks on a daily basis which they have to perform or which they have to see, and then they move according to that particular task at hand, according to which they have to move or they have to analyze about what they are doing and how they are doing over here, right? Okay, then moving ahead from here, now if we move forward, we have another thing, and that thing is called as data and information. Now if we talk about the data is basically raw. This is the raw collection of facts and figures, right? Data is the raw collection of facts and figures. And then if we talk about as far as the information is concerned, information is process data into meaningful information, right? So information is basically process data into meaningful information. Then we have classifying data. As far as the classifying data is concerned, we can simply have that we can classify it into the primary data, then we can do it into the secondary data as well, right? So basically this is how the classification is done. Now as far as the primary data is concerned, this is something, it is the data that has been collected directly from source. This is called as a primary data. So data which you directly collect from the source, this is called as the primary data. Whereas as far as the secondary data is concerned, it is the data that has been, you know, collected from, right? Okay. Now, let's just talk about as far as the journal example is concerned. Like, for example, you're selling your product in the market and you want to have a survey, or you want to get an information regarding, or you want to have, like, the information regarding what the customers think about your product, right? Now, you send your, right, or the stores where your representative is over there. Example, when we go to a big store, say in case there are, number of representative from the different brands of the companies over there standing by the aisles. So when you're doing the grocery or when you're doing the shopping, they ask you that what's your opinion about the product, or if you are trying to pick up, like, some other product, they say that, sir, please, you can try from our product as well, or from our range as well, this is really very good. And if we are taking up their or choosing their product, they ask us that, sir, how do you like the product, what is your feedback, anything in particular you want to say or ask or tell about or something, right? So they are getting or they are gathering the data over there from via the primary source. The customer is the primary source and they are directly collecting it up, right? So that is a primary source of the data that they have. When they are going to analyze it, and then when they are going to process it into some meaningful form or something, and then they will have an idea that, okay, how it turned out to be, or how, they have worked, or how, and what is the repute of their product is into the market, right? So that is their, how they, tend to get the information out. Then, as far as the secondary data is concerned, this is the data which you don't collect from the primary source, but rather you rely from the information being given to you from the other sources. Like, for example, we don't have the weather station at our home, right? We don't have a weather device being installed at our roofs. We get this information from the news or from the weather stations, right? That is something which we don't have, but we have to rely on the information of somebody else. I mean, as far as traffic, is gonna be. I mean, if you are planning for a holiday or something, and if you have to go to the holiday spot for, like, outing or something, you have to rely on the other sources or on the news in order to get an idea that what is going on there. Is it feasible right now to go, or go over there or not, right? So that is a secondary source of information. Like, for example, my family was planning to go to the north. I mean, we have the hill stations over here on the north side now, so they were planning to go over there. But in the news as well, plus on some social media websites as well, and the weather stations as well, they have issued a warning that from around 7th to 12th July, because of the monsoon, we are expecting and we are going to have really very heavy, thunderstorms and really very heavy rainfall, right? So the warning has already been issued by the, relevant authority, that if you are planning to travel the north at this time, then you should postpone it, because the weather is going to be really very difficult, and the chances of the landsliding and heavy rainfalls and urban flooding, I mean, the warning has been issued, right? So this whole information, this is something we don't have any primary source over there. This is the source which we got from the news, and this is the source or the data that we have from the secondary source, and ultimately we are going to rely on it, overall speaking, right? So this is what we have. Now, as far as the sources of data is concerned, as far as the sources of data is concerned for the organization, we have multiple sources of data over here. One is an internal source and one is an external source. As far as the internal source is concerned, we have employees, we have management over here, we have production records, we have administration records, and then we have the accounting records as well, right? So these are the overall speaking as far as the internal source of information is concerned, via which we get that where and everything is standing. Then as far as external is concerned, we have the media, we have the government, we have the customer, we have the suppliers as well, we have the bank, we have the external share holders as well, right? So these are the multiple sources of data that we have. Afterwards, we have the attributes of good information. Now, as far as the attributes of good information is concerned, we have accurate, complete, user friendly, cost effective, relevant, reliable, timely, and communicated to the right person. So these are the attributes of some good information. Now, the very first one and logical one, that is, it has to be accurate. Now, if you have to provide the information or you have to get the information from some source or something, if the information is not accurate, if the news is not accurate, then what's the point of having it at the very first place, right? So if the news is not accurate, obviously you are going to have a loss, or you are going to suffer a loss because you didn't get the correct information, right? So for the information, the very first by default characteristic that it needs to have is it has to be accurate. Then the information has to be complete as well. Now, as far as the completeness is concerned, at times, this attribute is something on which we don't rely as such or as much, because if you wait for the information to get complete, maybe there's a chance that you might get late in acting, or if you are planning to act for the information, you might get late about it, right? So overall speaking, one thing is for sure, that if you want the information to be complete, you might have to wait a bit, because of which you might end up suffering a loss. But again, information has to be complete as well. I mean, if you have to act upon something, then you need to know about the basics at least. So even if the information is not wholly complete, it should be something there on which, or on the basis of which, you are able to take up a decision at the end of the day, right? Then the information has to be user friendly as well. I mean, the user to whom you are providing the information, if he is not able to understand that what is written or how it is written, then what act the user is gonna be doing on that. I mean, the point which I'm trying to explain to you over here is that, for example, we have created a file of all the relevant students that we have over here in the MA. Now, if I ask my coordinator to give me the name, contact numbers, and the email addresses of all the students that we have over here in the MA, right? Now, ideally speaking, the best way to present this information, or to present this whole document, is in a tabular form. Like, the table should be there with the serial number, then with the name column, with the contact number column, and then with the email address. That this is going to be the most appropriate way via which it will be easy for me to understand overall. But if the coordinator gives me the information in a paragraph form, like for example, he says 01, this is Mr. A, with the number of 0923331768 and then the Mr. A's email address is over there, that 8@gmail.com, and then 02, Mr. B is there with B124 at this information. Now, if it's me, it will be really very difficult for me to understand that what is this, where the name is starting, where the number is, and then where the email address is. See, so this is going to be a bit trickier for me, na? So the information which I give, it should be user friendly, that the user who has to use the information at the end of the day, at least this is something which he can understand that what is written over there. Then the fourth point, this cost effective, this is the most important point over here. The whole management accounting, it talks about the cost and everything. By default, primarily, this is one point where, or a, like, around which the whole management accounting moves. Excuse me. Okay. The point is the cost effectiveness. The information that you are going to extract or you are going to provide, it has to be cost effective. If it's not cost effective, right? If it's not cost effective, then there is no point of having the information. That's it. Management accounting firmly believes on this point, that the cost which you are going to incur to extract an information out of something, the cost of information which you are going to bear to take out the information, its benefit has to be higher than the cost, or the cost has to be lower than the benefit which you are going to get. If this is not the case, then there is no point of spending the cost. There's no point of getting the information. I mean, if you end up spending extra, then there's no point of, like, uh, getting the cost, or there's no point of spending for the cost is concerned, right? So remember this point, okay? I mean, I always give this example by this way, that say in case if there is a shopkeeper and he's running his shop and he's a sole trader and he is into, like, a grocery store. No, I would not won't say the word store, because the size is going to be bigger. I'm just talking about the rod, like, a shop at the corner of your road or something, a very small shop, na, a tuck shop you can say as well. Now the sole trader is working over there. Along with him there is a little boy who's working over there, right? And then he spends like around 30,000 or so, 30,000 Mauritian rupee, you can say, he has spent for the sake of the audit for the stock that he has over there, right? After the year. Now, when the audit report came in, he came to know, or when he did his stock taking by spending 30,000 rupees or the Mauritian rupee, he came to know that the boy over there in the whole year, like, he took one toffee or one candy on a daily basis after the lunch, which he used to eat, and he did not put the 1 rupee into the till. This is what the audit report he got, or this is what the information he got after spending 30,000 rupees. Now he spent 30,000 of stock taking and everything, and what is the information he's getting? That the boy who ate a candy on a daily basis did not pay for those candies, right? He did not pay for it. So technically he had a loss of 365 rupees. But in order to get an idea, or in order to have this information that he has a loss of 365 rupees, look at the amount that he had to spend, 30,000 rupees. Now, the management accounting says that there's no point of getting the information like this. I mean, fine, you are spending the cost or you are incurring the cost, fine. I mean, this is on one side. But what is the cost you are spending at the end of the day? Look at that as well, right? So, this is not ideal to spend this much amount. There's no point of having this over here. Then, the next point is that the information, it has to be relevant as well. It has to be relevant as well. One of the, again, crucial and the important points over here, if the information is not relevant, then there's no point of having the information over here. Now let's say we talk about that there is going to be mm, a very, what do we say as, there is going to be a thunderstorm. I mean, there's going to be a thunderstorm in the LA, like in the Los Angeles, there's going to be a thunderstorm. And if you are planning and to go to a shopping or something, then you should avoid doing that, on the weekend. And then after the weekend, it's going to be good over there. Right now, we got the information regarding what is going to happen in the LA. The point is, you are in the Mauritius, I'm over here in Pakistan, right? So, what the weather is gonna be there in the LA, that is not relevant to us, right? The way I told you earlier about the weather which we are going to have at the north, this information was something which was relevant to us, right? Because this is something, because I was traveling to the north or my family was traveling to the north, for us, this information was relevant. But for the person who is not traveling to the north or something, for that person this information is not relevant, right? I mean, you get weather information regarding what is going to happen over there in the Mauritius, that is going to be relevant to you, but that's not going to be relevant for me, right? So the point is, if you are getting an information, you have to ensure that it is relevant to you as well. Otherwise, there's no point of having the, the information overall speaking, right? And then the information has to be reliable as well. The source, the source of information which you are getting at the end of the day, you have to ensure that this is also reliable as well. Because if the source is not reliable, if the source is not reliable, then what's the point? Or, not the point, but rather it can be riskier to act upon it as well, right? Like, for example, let's say over the course, when we start off with this session and all, na, one day one of the students messages in the group that tomorrow, on the next Saturday, we won't be having our class or something, na, a student messages within the WhatsApp group. Now, when you are going to read that message, what is the first thing you are going to do? Number one, I mean, if you're like me, without verifying, you'll take a chill pill. Okay, fine, we don't have a class, and you'll go and you'll have a rest and all and that, right? Otherwise, if a student messages and if you read the message, what is the first thing which you do? You straight away ask, who told you? You confirm the source. This is the very first question you ask. Who told you? Or who said so? Or how you came to know, right? But if the same message is sent by me, that because of some, issue, or because of some emergency, or because of some problem, I won't be taking my class on the next Saturday or something, then this is something you don't have to confirm, because this is something directly spoken from my side, or being told by from my side, or someone from the academy. If they drop a message into the WhatsApp group stating that there is no going to be any class or something, then that is something which is a reliable thing, right? So the reliable is over there, reliability factor. And then we have a timely thing over here as well. Now the timely thing is that when you get the information, now you have to ensure that this is on a timely basis as well. I mean, if you get an information and if it's not on a timely basis, or if you get information which is late as well, then you ask yourself that what's the point of having the information now? Then you ask yourself as well that what's the point of having the information? Because if you would have had gotten the information in a timely fashion, now you could have acted accordingly. But if you get the information late, then now there's no point of having the information, because it's too late now. Then communicate it to the right person. No matter how accurate, complete, cost effective, relevant, reliable, or the timely information is, if you don't communicate it to the right person, then the whole information, it just simply goes down the drain. You have to ensure at the end of the day that the information is communicated to the right person, because if it is communicated to the right person, only then that person is going to be, like you know that person will be able to act accordingly, or he will be able to, act in the best favor, or he will be able to act for whom the information has been provided. But if it's not provided to the right person or it's not communicated to the right person, then what's the point of having the information overall speaking, right? So this is what we have over here. Now, moving ahead from here, the next thing is cost classification. Talk about from the basics over here and the cost classification. If I talk about, we have a production cost over here at first. Production cost, which is related to production or rendering of services. Now, if it's related to production, that is something which is a tangible output. If it's related to the services, then this is something which is related to intangible output, right? And if I talk about as far as the cost is concerned, we have a material cost, we have a labor cost, and then we have the general expenses as well. Generally speaking, the expenses which are not the material, which are not the overall speaking as far as the uh, labor is concerned, right? Now, material, any tangible items cost put into produce product the product or service, like for example raw material. Then we have the labor, the cost of human, or we can say the cost of conversion by human effort. This is something more appropriate for the labor, right? Okay, and then after the labor we have the expenses, the cost which is not related to material or labor, or cost of renting the building, electricity, expenses, etc. Right? So these are over there that we have. Okay. After that, if we go into the segregation, okay, we can have this over here and this over here. This is the production cost. This is the direct cost. This is the indirect cost. This is direct material, direct labor, direct expenses. This is indirect material, indirect labor, and indirect expenses. Now, what is a direct material? Before going to the direct material, let's just talk about what is the direct cost. Direct cost is a cost which can be directly attributable or which can be easily attributed to as far as the product is concerned, and indirect cost is something which cannot be directly attributed to the product over there. Like for example, if I talk about the direct material, the material or the cost of the material that can be seen or identified by the naked eye in a product. This is a direct material cost. Then we have indirect material as well. The material which cannot be seen directly or identified in a product. Now, material used as a sport or not used directly in a product is called indirect material. Okay. Normally, I always say that if you look at a product, and when you're looking at a product, the material which you can see easily from your naked eye, which is over there, right, and which you can easily identify, that is something which is called as a direct material. Like, for example, I simply give you an example. Like, look, you guys are sitting on a chair, right? If you look at the chair, the composition of the office chair, we have the frame, then we have the seat, and then we have the back as well. Now, if we look at the seat, we have a cloth over there on the back side as well. Then we have the armrests as well. Now, if I simply look at the seat, I can identify the cloth, the foam in it. I can feel it and I can see it. I can see the armrests. I can see the iron frame as well, the base, and I can see the tires as well, or the wheels as well of the chair. Right? These are the ones which, while looking, I can easily see and I can identify. Right? Now, this is what we are going to call as the direct material. Apart from that, we have the indirect material as well. Now, let's just talk about the indirect material. The cloth which is over there, it has been stitched as well. So you have used the thread in the stitching as well. The thread and its cost is the indirect cost or is the indirect material. Similarly, the iron frame which you look over there, it has been welded, and the welding wire, the wire used during the welding, that is the indirect material. Similarly, there are nuts, screws, like, we have the nails. They are over there in the chair as well, which have been used in assembly or in joining or whatever. That cost is over there. So that is the indirect cost as well. That is the indirect material as well. Then the seat on which you are sitting, and if it has the foam within it, and it has the cloth over it as well, then 100% I'm sure there is going to be, like, the wood pieces in it as well, in order to have it shape and in order to, like, get it installed on the frame, and then the backside as well. Definitely, for sure, the wood is going to be there. So the wood, the small ply or the pieces of wood which have been used, they are going to be the indirect material over here. And then there's one more indirect material which is over there, which is normally right in front of us, but we are unable to identify. And that is, say, in case the chair is of black color, so the frame has been painted black as well. The cost of the paint, is going to be indirect material over here as well. Now, apart from this, what we can identify from the naked eye or not, I mean, if we go from other way around in order to identify that what is going to be the direct material and what is going to be the indirect material, the more logical point, if we talk about in order to understand it, is simple, that the direct material is something, the cost of the material which can be directly attributable to, or which we can directly attribute to the product, overall speaking. Like, for example, if we have used the cloth, so we can calculate how much of the cloth has been used, and we can straight away and easily calculate its cost. And as far as the iron frame is concerned, we can easily calculate that what is the cost per frame. And if we obviously we are using one frame for the chair, so we can identify its cost. Similarly, the tires which have been used, we can simply straight away calculate the cost of the tires as well. So that is why they are the direct cost. Now, as far as the screws are concerned, right? As far as the screws are concerned, you will have to count the screws wherever you have used. And secondly speaking, these screws are the ones which you can you count it like there are around 15, 16 screws in a chair, right? Or you have identified that there are like around 8 screws in a chair. But do you know, when you go in the market to buy the screws, you buy them according to weight. You don't buy them according to the number of heads. I mean, if you go, I'll give you a basic example. If you go to electronics, the market now, where you have the screws for the laptops, or you have the screws for the mobile phones or something, now over there, if you go and you buy the screws now, like for example, you have a repair shop or something now, they will give you the packets. This is a 100-gram packet, this is a 200-gram packets, and on average there are 100 screws, there are 200, there are 300 on average screws in it. They give you the packets. They don't give you by the numbers. They give you by the weight. Similarly, we talked about the thread over here, which has been used in as far as the stitching the chair is concerned. Now, if I ask you how much of the thread has been used to stitch a chair, how can you tell me? 1 meter, 2 meter, 10 meter, 20 meter, 50 meter, 100 meters. How much meters have you used the thread? Can you quantify? Now, we have seen the small threads like, I don't exactly remember the name to call it as over here. We normally have at the homes, like, our moms, like, or somebody like, from the grandparents, they normally have this over here for the sake of the stitching. I mean, if they have to stitch the button or something of the shirt or something, they have this smaller one over there, now. Now, over here in Pakistan, if I talk about that, maximum cost for the smaller one, which we normally have at home, is like around 10 rupees or something. Now, we have seen that the smaller one. Now, have you ever tried to quantify that how much thread is over there in that smaller piece of the thread that we have? I mean, like around 10 meters, 20 meters, 100 meters, 200 meters. Have you ever tried to quantify it? Let's say that is like around 50 meters. Now, the cost for the whole is like around 10 meters, sorry, 10 rupees, and the total cost is like, total length is over there for 50 meters or something. Now, how can you identify that how much of the meters have you used? Practically, this point is gonna hurt like really, like anything. This one, the cost effective. You know, when you try to quantify that how much of the thread has been used to stitch a chair or something, you will end up spending a lot of cost to calculate, to check, to identify, and all, right? So the same point hits again. The information which you are trying to get out of here is, or extract out of here, is something which is really very difficult for you to do, right? Similarly, the paint which has been used on the frames or something, again, the cost to quantify how much of the paint has been used to paint the chairs. I mean, say in case if the painter ends up putting extra thinner, right, into the paint, so your paint will be used less because it's already more liquidy form. If he puts the less liquid or the thinner in it, then it's gonna be like, dense, and it will be used, maybe it will be used more or something. Again, this is something which is really very difficult to quantify. So that is why we put these into the indirect material thing over here, right? Okay. Then afterwards, we have direct labor. Direct labor, the labor involved in the direct handling, manufacturing, or rendering of services. This is what we called as the direct labor. the labor which is directly involved, which is directly involved into the production process, or which is directly manufacturing or handling the product or the services, they are called as the direct labor. Then we have indirect labor as well. Indirect labor, the labor working in sportive role is called as the indirect labor. The labor which is directly involved in the production, which is directly working on the factory floor, something that is going to be called as the direct labor. The labor which is helping, or the cleaning staff, or the guards, or security guards, or something, they are the ones which we are going to classify as the indirect labor as well. Then we have the direct expenses. Direct expenses, the expense which are directly incurred because of production, the ones which are not material and labor, right? So these are called as the direct expenses, the ones which are directly incurred because of the production, the ones which are not material or the labor, they are going to be called as the direct expenses over here. Done? Okay, now as far as this cost is concerned, we can also segregate it into the production cost and non-production cost. First, we segregated it between the direct and indirect. Now we are segregating it between the production and non-production cost. The production cost is then further categorized between the direct and indirect over here. Whereas the non-production cost, this is segregated between the administrative expense or the administrative cost. This is also segregated over here as selling and distribution cost, and this is also segregated as the finance cost as well. Direct cost is direct material. We have direct labor, and then after the direct labor, we have this direct expenses as well. As far as the indirect is concerned, we already did happen to see that we have indirect material, we have indirect labor, and then we had indirect expenses as well, right? Now, we did happen to talk about earlier this segregation between the direct and the indirect cost for the production cost. Nah? So this is over here with the production and the non-production. We have already segregated this. And this is the non-production cost which are incurring, which we are incurring on the side. Like for example, the administration cost, for example, the selling and distribution and finance cost as well. Right? Now, the best thing is the direct cost that we have, if we do the sum of all direct cost is called prime cost. The sum of all direct costs is called as prime cost. And then this all indirect material, indirect labor, indirect expenses, these are called as factory overhead cost. These are called as the factory overhead cost. And when we do the addition between the sum of all direct costs and the factory overheads, we get total production cost, right? So when we do the total between the production cost, that is the when we do the total, of the direct cost and the indirect cost, we get a total production cost over here, right? Okay. The second point is we can also do the classification of cost according to organization structure as well. We can do the classification of cost according to the organization structure as well. The first one is the cost center that we have. Now, cost center, the department of an organization that is responsible for incurring the costs only. That is the production department, marketing department, or etc. They can be there where we have incurred the cost and the cost only, and these departments are only responsible for the costs which they are incurring. Then we have the revenue center with us. Now, this is the department which is responsible for generating the revenue only. Like, for example, the sales department. So, the department which is responsible for generating the revenue is something which we call as the revenue center. Then we have the profit center overall. This is any department, or this is any department, or we can say any branch of business working independently, that is called as the profit center over here, right? So the different branches that you have the business, different outlets that you have the business, they are the ones which you normally classify over here. And then we have the investment center over here as well, and this is the business as a whole. If we talk about that, is called as a investment center over here, right? So this is what we have. Okay. Now, moving ahead from here, the next thing which we are going to have over here is basically the cost behavior that we have to talk about now. Okay. Now, as far as the cost behavior is concerned, cost behavior is the way or pattern by which the changes by cost changes as the level of activity changes, right? So cost behavior is the behavior of the cost, or the way or the pattern by which the cost changes as the level of activity changes. So what is the level of activity, by the way? Level of activity is volume of sales, volume of production, total number of labor hours, total number of machine hours, number of production runs, number of inspections, etc. So these are the ones which we have as the level of activity over here, right? Okay. Now, first thing first, we have a variable cost with us. As far as the variable cost is concerned now, the variable costs are the cost that increases as the level of activity increases, usually by the same amount, for which, or not for which, the variable cost is the cost that increases as the level of activity increases, usually by the same amount, for each additional unit of product that is made, or each additional unit of service that is provided, right? So that is what we have overall speaking as the variable cost over here. Now, variable cost is also called as the marginal cost, right? Variable cost is also called as a marginal cost as well. So this is the cost which is going to increase as the volume increases, usually by the same amount over here. And let me just show you basically what I want to say over here. Like, for example, we have a product over here. We have a per unit cost. We have number of units, and then we have a total cost over here. Like, we have a product X, Y, and Z. Per unit cost is $5. We have total 10 units, so we have a cost of 50 over here. This is per unit 6. We have number of units at 20. So this is going to be 6 twos are 20. So this is 120. And then over here we have 7. Number of units are 30. So over here this is going to be 210 over here. Right now, if we explicitly talk about the product X over here, let's say we have product X only over here. Okay. We just have product X, so the per unit is going to be 5, 5, and 5. Now we have the number of units at 10, 20, 30. So over here, this is going to be 50. Over here, it's going to be 100. And over here, this is going to be 150 over here. So basically, this per unit and this total cost over here. So if I talk about this one and this one. Now, look, one interesting point is that this variable cost remains the same in per unit. This variable cost remains the same in per unit, and this one, if I go over here, total variable cost will increase as the level of activity increases. So total variable cost, it increases as the level of activity increases. I mean, if I look over here, okay. Here we go. Let's have it a bit more, okay, accurate over here. Now, look, this is the volume, this is the amount, right? The variable cost is going to remain the same over here, and this is going to be variable cost per unit. And if I go over here, this will go like this. This is again the amount. This is the volume, right? And this one over here, in total, it increases as the level of activity increases, right? It simply just it keeps on going and it keeps on increasing as the level of activity is increasing, right? Okay, then we have this fixed cost over here. First, we have the variable cost. Now we have the fixed cost, regardless of the level of activity, and they remain the same during a period. Fixed cost is also called as normally they range with the level of activity, and they are also called as the period cost over here. Now, okay, now we have the amount over here, we have the volume over here, we have the volume over here, and then we have the amount over here as well, right? So we'll have this straight line over here. This is called as fixed cost in total. It remains the same, right? And if I try to go into the per unit now, this will go like this, right? And this is something which we call as increases. Like for example, I have a rent of a building at 40,000 per month. Now, say in case if I have a rent of 40,000 a month over here, if I have, no matter if I do the production or not, I have to pay the rent. So it's fixed. I do less production, I do high production, the rent is going to be there fixed. That is 40,000 a month. Now, as far as the fixed cost per unit is concerned, as the number of the units increases, as production increases, the per unit cost it decreases. Per unit cost it decreases as my production increases. Like for example, if 10,000 units are manufactured, right? The rent per unit will be 40,000 divided by 10,000, that is going to be $4 per unit. If 20,000 units are manufactured, the rent per unit will be 40,000 by 20,000, that is going $2 per unit. And if 4,000 manufactured, the rent per unit will be 40,000 by 40,000 is 1 per unit. Basically, per cost simply drops as activity increases. Level of activity is increasing, dropping per here, right? So this one. Okay, I got disconnected. Sorry. So we were talking about this one over here. So we did happen to see that in per unit, this one basically drops. Now, moving ahead, we have a semi variable cost or semi fixed cost over here. The semi variable or the semi fixed cost is where one portion of cost is fixed and one portion or one part is variable, that is called as semi-variable or the semi-fixed cost. You have a partial portion which is fixed, partial portion which is variable, that is called as the semi-variable or the semi-fixed cost over here. And from the graph point of view, if I go over here, right, this is the amount and this is the volume. So the graph is something like this, right? So over here, this is the variable cost. This is the fixed cost that we have, right? So fixed cost remains the same and the variable cost is something which is increasing overall speaking. Okay. Then we have another cost called as stepped fixed cost. A stepped fixed cost is a cost which has a fixed cost behavior pattern within a limited range of activity and goes up or down in steps when the volume of activity rises above or falls below a certain level, right? So step fixed cost is basically which has a fixed cost pattern or which has a fixed cost behavior pattern, and that is something which is for a particular level, right? For a certain level. But after that level, it either goes up or it goes down depending upon as far as the level of activity is concerned. Like for example, if this is the volume over here, this is the amount over here. So the step fixed cost is something like this. So it is going up above or up via this pattern over here, right? So this is what we have over here for as far as the step fixed cost and everything is concerned. Done. Okay, now moving ahead from here, uh the next thing is we are now going to have forecasting techniques over here. Forecasting means to predict, and in the forecasting we are going to have these four areas which we are going to talk about. over here, over here, and then this over here. Four areas are basically over there for the forecasting. In this, we have time series analysis. We have regression analysis. We have high-low method. And then we have index numbers, right? And overall speaking, if we talk about why do we need to have the forecasting techniques over here, so the answer to this is simple. Okay, I am unable to write. Okay, I'll write over here. Organizations need to predict about their costs and revenues, right? So this is what we have. And this forecasting technique is something that we will start from our next class, right? I'm going to stop over here for the day. It's just that I don't want to overwhelm you guys. And I don't want to, like, go into the rush in the very first class, right? So we'll start this forecasting techniques over here from the next week, right? And what you have to do is just simply go through this all what we have learned so far. And it's a general knowledge thing that we have to have over here in the management accounting. So just go through what we have learned, and if you come across any problem or something, feel free to ask. I will be more than happy to assist you and guide you in that, right? So this is all from my side. I am going to see you next week, same time, same place, same channel. Till then, take care of yourself, your family, your friends, and the people around you. Have a lovely weekend. Until we meet again, bye bye.